really for me, my Uncle Al was a major antique dealer back east. And, 1965, he showed me 2 floor safes that were packed with pre-1933 gold coins. Well, in 1965, it was illegal to own more than, or 1964 is one of those years. I was 10, so 1964. But it was illegal to hold more than 5 ounces of gold, other than the way that he was holding it. And I didn't realize until many, many years later, but what a huge impact that had on me. And I think the reason why I said 1965 is because they already knew that that there was already a run on the U.S. dollar by foreign governments sending in their dollars in exchange for gold. And that's when in 65 is when they actually re-legalized gold certificates. Now, you couldn't convert the certificates into the physical gold at that point because it was still illegal to hold it in any other form than the way my uncle was holding it. But, how many people knew about that one? And, you were buying it on those certificates at $35 an ounce, and he was probably buying those coins somewhere near that as well. Maybe a little bit higher because there were 2 different gold markets, and so there was a lot going on in the gold market in the 60s. But, you talk about history, and if you really look at it, you can see, because history is repeating itself, who gets the best benefit from all of those changes that the governments do and the central banks do. Well, I do think history tells us that going back to a degree on the gold standard is the most likely outcome. And then again, they'll whittle it away. So do I think we're going to go back to the 15-to-1, the gold-silver ratio, which is, I think, what he's really asking? I don't know. But what I can tell you from history is that we will see that ratio get more and more narrow. Once we're dead in the hyperinflation, then you're going to see that grow a little bit more simply because gold is the primary currency metal. I personally I have a lot of silver. I like it for my barterable portfolio. I don't really hold that so much for my wealth preservation portfolio. I hold it for my ability to barter. If I need to put in a tank of gas or I need to, buy some strawberries, which I shouldn't because I have gardens, but, for my day-to-day. So I think that will narrow. But when we're in the thick of it, I think it'll grow further apart again, simply because that's what history tells us. So I don't know that we'll get to one to one. But the other part of it is that usually when somebody asks that question, they're thinking about it in terms of dollars or any other fiat currency. And when that occurs, everybody's going to be well aware of what's happening to the currency. You're not going to convert it into that currency just because you're going to know it has no value. So that's why for me it's about barterability and making sure that I can convert it into smaller items that I would not use my gold for. So gas, food, those kinds of things. The digital dollar will not be the reset. But people will think that, oh, okay, now we've got the new currency, right now I feel like we're in the roaring 20s again, and we're in the 20s, and usually before that major currency, just to get everybody really feeling good and not paying attention, we see an economic boom, which we're seeing right now. I'm not saying anything is fixed. It's all done just on more and more debt. Devaluation, depreciation, which is wealth that's lasted in families for at least 300 years. You're in England, so this is a perfect example, Queen Elizabeth and the Queen's family. But dynastic wealth has 3 legs: real estate, rare, really rare collectibles, and gold. You can do all three with the gold. So I do have what I consider dynastic wealth coins with very, very low mintages and very, very low populations that I don't intend to convert into, I mean, I could, but my intention is not to convert them into income producing assets, but rather to pass them down from generation to generation to generation. While I have other gold that it is absolutely my intention to convert into other income producing assets, which right now they're up here, but this will flip-flop and gold will go up there. Those other income producing assets will go down here. Then I will capture some of those gains and convert them into those income producing assets. But I 100% have a nice chunk of my portfolio in the collectible gold coins that really are, my intention is to pass them down and pass them down so that my family, long after I'm gone, still has wealth and therefore choice, because that's a lot of what this is about, is retaining your choices. So I think you're referring to what would happen if they actually confiscated silver. Because if they designate it as a strategic metal, maybe it's because they want to confiscate it. In which case, then you might say you need to have the collectible metal as well, which I have a little bit. I don't really have a lot of that. For me, most of my silver is raw. But if they designated it thus and they chose then to confiscate it, well, what do you think would happen to it? It's not in the market. So that anything that is left in the market would have a lot more value to it. Since all of the central banks are really just making the commitment to buy as many bonds as they need to suppress the interest rates, when you do, and even at that, they have not been able to keep them as low as they have wanted to keep them. You know, that's why you see the stock market acting really bipolar these days, because on the one hand, in theory, when inflation rises, then central banks increase the interest rates to suppress that inflation. But that is not what they're doing anymore. And they warned us about it when they went to that average 2%. So when you see a big spike in interest rates, and honestly, this is something that I've been questioning. Are the central banks losing control?